Natixis investment manager, lead portfolio strategist Jack Janasiewicz, and Fitz-Gerald Group principal Keith Fitz-Gerald. Jack, I know you've been hearing from clients, and as we watch this constant gyration, what are you telling them? Because once again, we have seen more than 1,461 points fumbled in the green, and now the Dow is down 202 points.
You know, and I think what's been interesting from our perspective, the retail side of the equation has actually been holding in there. I think what the data we're following, the liquidation has really been coming from the leverage community. So retail actually is looking to buy the dip in here still, which I think is kind of interesting. You know, we started to tell people to take a little bit of risk off the table at the end of February. We took a little bit more off as we got into the first week of March. So, you know, we went from a neutral position in equities to an underweight. And we're basically saying, look, you know, I think it's time to wait this out for a little bit. Let's wait for the volatility settle, a little bit more clarity on tariff policy, and we need some confidence, I think, to come back into the market. So wait with a more cautious position, I think, at this point.
Keith, I know it's only 30 stocks, but when you look at the Dow, two-day picture here, this is pretty significant, as is the VIX. The CBO volatility index, or so-called fear index, is now up 11.5%. And earlier, it was down. So the fear just seems to be waxing and waning depending on the headlines at the moment. Give me a sense of how you absorb all of this, because investors really need some guidance.
Well, they do. And, you know, we absorb it very calmly, coolly, and collectively because we emphasize the low beta dividend stocks ahead of time. We've been looking for stability because we anticipated that something like this might happen. Now that it's here, we're not going to change course. We have a plan. We're going to stick to it. We're going to continue to execute. The stability is what we're after. The volatility, the flex, what that tells me is traders don't know what they're doing. To my colleague's point, yes, retail investors, they do actually, for one, know what they're doing.
Okay. Do we, though? Because, and this is important here, Keith, one second, because you have been pounding the table for months and months and months, correctly so, when it comes to the palantirs of the world, but also you have been a fan of Tesla and Apple. We're looking at Apple right now in the worst position on the Dow. You could just look at the Dow heat map here. It is down 4.7%. And if you stretch out the Apple picture, it is much uglier over the past several days. That's going to cause a mark. What are you doing with Apple right now?
Well, I'm not liking any of this, to be very clear, but my perspective is 3 to 5 years from now, I think the stock doubles or triples. It's going to get through this. We've been here before. So
why not
I
buy?
think we are going to look forward, and that's what we're doing.
Why not buy here? Keith?
Can you hear me? Yes, I can.
Yeah, why not buy it here then if you're feeling in 3 to 5 years it's going to look so good?
Yes, I am buying it right now, Liz.
Oh, okay. All right. Let me go back to Mr. Janasiewicz, because to tell you the truth, I was reading, you know, your perspective a little bit earlier, and you are concerned. You're not at the recession point yet, but JP Morgan is. What will be the trigger?
You know, we've got two things we're paying attention for this off ramp, where I think we would start to weigh back into risk assets. You know, and one would be a pivot from the Fed, and I think we heard from Chairman Jay Powell on Friday that that's probably not anytime soon. So I think we can rule that one out probably for the next couple of months. The second one is really a reversal of this tariff policy here. So you need, I think, a complete 180 on the tariff outlook before you start to get some traction in the equity market. So those are the two things we're looking at before we start to put risk back on in the portfolios.
Well, yeah, it would make sense to be a little cautious, right, Keith? I mean, you've also, like Tesla, the high of the session today, Tesla was at $250. Maybe we can show an intraday here, because right now it's at $224. So people who woke up this morning and said, oh, it's going to be great, President Trump is speaking with the South Koreans and the Japanese, and we're going to have some deals here. Not so. And for 2 days, it's down 6%. The really ugly picture for Tesla is year to date down 44%.
Well, again, you know, we've been here before. I'm not happy about this. I don't like it, but I also know that you don't see gift horses very often. And I believe in the robotics, the FSD, the AI, all of the things this business is here. Most investors fail at moments like the present, Liz, because they lack a long-term structure to get them past short-term chaos. So as hard as it is, I'm trying to focus myself on that long-term structure.
Yeah. And Thomas Petterfee of Interactive Brokers sat here right on the show yesterday and said it will be the best buying opportunity that he's ever seen. Really quick, Jack, the sectoral tariffs that could be coming. We're talking lumber, pharma, Chips, the chip makers. What are you worried about there? What do you say people should do?
Again, it's just incremental uncertainty that continues to weigh on the marketplace. And so until we get greater clarity on this backdrop, I think these sectors are still going to have that black cloud hanging over them. So, when you distill this whole market backdrop down, it really comes to credibility and confidence. And until we can get confidence, whether it be on the business side, consumer side, sentiment starts to roll over and become a little bit more supportive in here, it's a confidence game. And these concerns still overhanging really aren't helping to build that confidence at any point.
Well, I'd love to say good to see you both. Once again, now we are seeing sort of these losses begin to metastasize. The Dow is now down 249 points, NASDAQ down 292, and the S&P losing 1.5% or 71 points. Thank you very much, gentlemen.